I'd like to review the scalping technique that I use. This is on a 30-minute chart. What you're looking at is the euro dollar. This is a 30-minute chart. And here we've got a clear level of consolidation. What I'm looking for is a breakout. Now there's a couple of different techniques that I can use. First of all, the scalping technique and then the breakout technique. On this pair, the euro dollar, we got a candle that closed above this consolidation range, giving me the breakout technique. But the breakout technique will come with a larger stop loss in most cases. So I'm looking to minimize that stop loss, and I'll show you how I do that. What I do is I leave the entry alone. My normal technique for a breakout calls for an entry as the high is being taken out after I've identified and confirmed the breakout on the 1-hour chart. But what I do to minimize the stop loss is let the move occur, let the entry occur, and let it move up a ways, because we can see that price has already moved a considerable amount already at this point. It's due for some kind of a pullback. At least people are going to sell off and take some profits at this point. Nobody knows for sure if price is actually going to come up to this old resistance here at 31.58, right? So some people are taking some profits. I wait for that pullback that you see right there. Now I wait for that Tech 1 candle pattern. The Tech 1 candle pattern is reviewed in my trading manuals, but here is that Tech 1 candle pattern. That's my entry. Now what I've done is, rather than get in on the breakout and look for support as a potential area to identify the stop loss, that's not to say that I'm going to use this low here as a stop loss if I got in on this breakout. But what I'm saying is, technically, the support level is here in price. So anything can occur on this breakout as a pullback. What I do is I wait for the pullback to occur and look for that Tech 1 candle pattern, confirm the Tech 1 candle pattern, and then enter on the close of that candle on the 30-minute chart. Now I've reduced my stop loss. I'm no longer looking at an area between the entry and this low as a stop loss, because we all know, if we pick a number like 40, 50, 60 pips as a stop loss, we're bound to get hit, because the market doesn't care about our stop loss. The market cares about support and resistance in price. So I've allowed price to form a low here. So now I've minimized the stop. So it's going to take a great deal of patience and some discipline to let this move go. It's easy while you're watching a move like this occur to convince yourself that you've just missed out on the biggest trade of the day. Price is going to go and take out the highs from the previous day. Well, don't play those kind of games. Don't allow yourself to think like that. If you start to think like that, get up, walk away from the computer, turn the charts off, whatever it is you've got to do. If you're looking at a 30-minute chart, if you're looking at a 15-minute chart, come back 15 minutes later after you know a candle has printed. Let this retracement occur and look for your technique or your pattern. Anything else, leave it alone. That's what I do. I'm just going to wait for my specific trading strategy to develop. Everything else I'm going to leave alone. The rest of the stuff I'll watch, and I'll be identifying potential levels, support and resistance levels, watching how the market's reacting, watching how traders are reacting to the news. A lot of things can occur even when you're not trading. So it takes just as much effort to identify a trade that isn't going to work as it does to identify a trade that will work. Here's my entry. Remember, I get a break out of this consolidation range. I get this pullback. That's where we use the Tech 1. We use the Tech 1 in 2 different locations. This is the second location, and that's our payoff. And of course, price continues to trend. Now, I want to show you compared to the pound dollar. Now, this is the pound dollar. This is a 30-minute chart. This is the same candle that occurred on the euro dollar that gave me that Tech 1 candle pattern for the entry. The problem with this one was it was inside of consolidation. I'll tighten up the screen a little, and you can see this consolidation range. We're just bouncing off of these highs and lows, even from this previous swing here. Everything is just inside of this range. So with a pair that is inside of consolidation, we know that consolidation is usually no clear trend direction. So price is going to move around without any clarity. There's not going to be a lot of momentum. People are going to take small pieces of whatever activity is taking place. This one didn't have the momentum to move the way the euro dollar did. So I stayed away from this one because I was able to identify this consolidation range. So the tip to learn from this video is that if we're going to use any kind of technique, especially a scalping technique, try not to use it, or be very specific when you use it when price is inside a consolidation. I'd rather wait for price to move out of consolidation, a breakout move that I can identify like I did on the euro dollar. This one was still in consolidation. As soon as this candle closed, the entry on the next candle immediately pulled back. If you're looking to use a 15 or 20 pip stop loss on a scalping method, this would have clearly stopped you out. Even though it didn't take out the low, and even though eventually it went higher, it's a frustrating situation to put yourself into where you have a stop that's put too tight, or a stop in general that you use all the time. It gets hit, yet price still goes to that profit target. So we're looking to minimize that kind of possibility. And identifying what state the market's in, whether trending or consolidation, is going to help you identify which technique to use or whether you should stay out of the trade altogether. Thanks for watching.